Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about my strategy and my plan to trade during these rough times ahead. So I hope you guys all enjoy it. If you do, smash that like button, subscribe. And if you guys have any questions, feel free to ask down below in the comments. And if you guys want to learn more about trading and swing trading in the market, check out our school. For those of you that are new to the channel, I've been swing trading for over 7 years full time. And we have an amazing school. It's called the Swing Trading Masterclass, where we have private live streams, quizzes, lectures, the group chat. But more importantly, we actually teach you how to find undervalued stocks. We teach you good strategies, good approaches, my mindset, psychology of a trader. And we have an awesome sale going on for 51% off using code SPRING25. It's an early spring sale, so check it out. Only 6 spots left for that code. So guys, check it out down below. And guys, let's jump into this here. So, all right, what is going on? This is everybody's main question here is what's going on? Well, you guys can see after hours, the market sold off like crazy. And this is because of the new reciprocal tariffs coming out. So now what does this mean? So reciprocal tariffs are different than other tariffs. Reciprocal tariffs are you tariff company or countries that tariff you already to make it an even playing field across the board. You do this in hopes to have those countries want to get around those tariffs by moving manufacturing to the United States, which would bring jobs to the United States, which would overall help the economy grow because you'll have better jobs, often better pay, more competitive market. So now the reason why we're getting sell-off is because of uncertainty, right? This is not a 100% thing that, is 100% guaranteed to happen. No, we could go through, a couple of months, maybe a year of volatility in the market ahead. So this sell-off is just because of fear. It's because of uncertainty. And often with investing and trading, like I always say, any action in the market is often an overreaction. So, for me, what am I going to do? Well, the first thing here that I'm going to do is buy VU. Vanguard S&P 500, you better believe it. Tomorrow morning, I'm going to be averaging down. Better believe it. 100% certainty I'm going to be buying this tomorrow. I'm also going to be buying it if it sells off more and more and more. I don't get scared of sell-off. I'm also going to be buying QQQ, which is a NASDAQ ETF. This one's down about 4%. Also, we'll probably pick up maybe a little bit of Visa. We're actually still profitable on this trade given the sell-off here, given our average cost is about 331. So we could limit out and sell out of this position tomorrow for a profit. Amazon here, we're down, but honestly, we're probably average down this one. We've thinned out our Google share. We've lost about $700 on this trade or so far, but in hindsight, we always could average down as well with this one. Now, the reason why I say average down is because of this, okay? So when the S&P 500 is down about 25% or more since 1950, okay? During this time, right, of sell-off, there's a lot of fear, a lot of emotions in the market. But historically, what happens 1 year after? Well, you get an average return of 21%. So if I can buy VU, QQQ, all these blue chip, well-established companies during this time, I can leverage this and have a great return historically that next year. Now, the average recession does last about a year span. But what you can do is you can be buying those dips so it cuts that time down, dramatically. And another little pro tip, anytime the market sells off about 6% or more, double what you normally will put in. So if you put in normally $1,000, go $2,000 if you guys can afford it, because that will average your cost down a lot more. So this is why I'm not scared. I understand the long-term outlook of a lot of this stuff, but what are some ways that you guys can trade good stocks? So pulling up here on Finvez, which is just a stock screener here, one of the first things that I would do is focus more blue chip. You guys will know that we sold out today on GILD. We sold out of this one today before the announcement for about a $1,200 profit. Now, the reason why we sold out of this is because GILD is more of a mid-cap stock. It's not a blue chip, well-established company. Now, we could see a lot more volatility among these types of stocks. Yeah, it's only down about 1.4% after hours, but with a stock like this, sometimes you could see 5, 6, 7% after hours. Like I'm sure I haven't even looked, but I'm sure if we looked at like Palantir, right down about 8%. Often higher growth stocks have more volatility during like recessions or crashes. So going back to your Finvest scanner here, going to your screener, when you're scanning for opportunity, the first thing I would do here is change the market cap. I would change this to about 200 billion or more. And you guys can see now we have a lot more well-established companies in here. Costco, Bank of America, all of these companies that carry a lot of potential. And tomorrow when the market opens, I'm sure we're going to have so much opportunity just because sell-off historically brings a lot. But the first thing I'm definitely doing is taking advantage of just trading blue chip. The next thing that I'm doing is going to the current volume. We want about over 500K because we obviously want shares, to be able to get in and out of the position. The next thing we want is relative volume over about 0.5. This will make sure that there's buying pressure involved. And you guys can see we have about 49 stocks left. Now, from here, one of the things you guys could do is change the price. You also could find the performance here. Going to the performance is very important because you want to make sure that the stock you're interested in buying is up. I like up about 10%. Um, you know, I always think that's a good one year to date. And you also could do in the past week, sell just is down a little bit. So we have like a stock on an upward trend that sold off a little bit here. So now as we go to like the charts here, we can see stocks that are on an upward trend and have sold off to some level of support here. So now tomorrow, as we look for some of these plays, I'm going to be looking at like JP Morgan Chase, ticker symbol JPM. As we look at this stock here, it sold off a little bit, but we still have, a possible nice little trend going in this direction here. That sold off. We could see a move, continue to rally up, possible breakouts, and so on and so on. We also could see, it looks like Meta has a nice trend line here. So obviously focusing on stocks that are blue chip, well-established companies, and sold off down to some sort of support. So that 200-day moving average line is right there, right? And we could see a move just like we've seen in the past here where it's hit it. So definitely going to be looking at this here tomorrow, looking at for breakouts, looking for opportunity. But this is the first thing that I would do. If you guys are taking advantage of sell-off, understand you can trade ETFs, you can buy blue chip stocks. And for me, with my swing trades, I'm definitely focusing more on larger, well-established companies. To help reduce that volatility. So guys, I hope you guys enjoyed it. Smash that like button, subscribe. Don't forget to check out our school and you guys can get 51% off. So check it out. I'll see you guys in there. Like, subscribe, and we'll see you guys in the next one. Take care.